Hi class, I hope everyone is doing well today. Today we're going to go chapter 12, statement of cash flows. Okay, so the first one, each of the items below must be considered preparing a statement of cash flows from Bakersville Corporation for the year end December 31, 2014. It says for each item, state how it should be shown in statement of cash flows for 2014. So the first one, issued bonds for $200,000 cash. Well, first off, if you issued bonds, it will be a cash inflow. Okay, and because it's a bond, it deals with your financing activities. It would be cash inflow from financing activities. That's what now. I said purchase equipment for $150,000 cash. Well, first of all, if you purchase equipment, it's going to be a cash outflow. Okay, from. Now, remember, anytime you buy and sell equipment, any property, plant, and equipment, it's going to be an investing activity. So it'll be a cash outflow from investing activity. Okay, so now you sold land costing $20,000 for $20,000 cash. Okay, now, because you sold the land, it's going to be a cash inflow from, okay, just like B, remember, any property, plant, equipment, any land, it's always going to go under cash inflow from investing activity. Last one said declared and paid a $50,000 cash dividend. Well, if you paid a dividend, we know it's going to be a cash outflow from. Now, remember, dividends relate to how a company is financed. It would be cash outflow from financing activity. Okay. The next one now number 2. Yeah, the T accounts for equipment and related cumulative depreciation for Lube Company at the end of 2014 are shown here. In addition, an income statement for a loss on disposal of equipment for $5,500. What amount was reported on statement of cash flows as cash sale from sale of equipment? Okay, well, let's take a look here. Let's take a look at the solution here. Okay, start with the first part. The first part is, let's start with the original. You always want to start with what is the original cost of the equipment sold. So the original cost here is $22,000. So start with $22,000. And then you want to take out the accumulated depreciation. Okay, so how much do you have so far? So that would be the $5,500. Now, this part, you get the book value of equipment sold, you take the $22,000 minus the $5,500. This will be $16,500. Now, the last part is you want to take out what is your loss on sale of equipment, which we know is the $5,500. Okay. This will give me, again, we should try the 2, so my cash received from sale of equipment would be $11,000. So cash from sale of equipment, put it right here, $11,000. Okay, let's go next one now. Number 3 here. It says Tabaris Corporation had these transactions during 2014. So analyze the transactions and indicate whether each transaction resulted in a cash flow from operating activities, investing activities, financing activities, or non-cash investing and financing activities. Okay. First one I said issued $50,000 par value common stock for cash. Remember, anytime you deal with your stock, it's how your company is financed. So this would be a financing activity. Okay, so purchase a machine for $30,000 given a long-term note in exchange. Well, your machine affects your investing activities. And a long-term note affects your financing activities, except you purchase a machine by giving a note. So far, no cash has been exchanged. This would be a non-cash investing and financing activities. Okay, continue on now. Number C says issue $200,000 par value common stock upon conversion of bonds having a face value of $200,000. So you're affecting your investment that you made and your financing. So it can be investing in financing activity, except all you did was convert your stocks to bonds. So again here, it's going to be a non-cash investing and financing activities. Because for now, there's no cash involved, except later down, there could be cash involved. Okay, so declared and paid a cash dividend of $18,000. Okay, remember, dividends, that affects your financing activities. So long-term investment with a cost of $15,000 for $15,000 cash. Again, long-term investments, name says it is a investing activity. Investing activities. So collected $16,000 on accounts receivable. Accounts receivable affects your operating activities. And the last one, paid $18,000 on accounts payable. It also affects your operating activities. All right. Next one now. Number 4 says Gutierrez Corporation reported net income of $225,000 for 2014. A depreciation expense of $45,000, a loss of $5,000 in disposal equipment. The comparative balance sheet shows a decrease in accounts receivable of $15,000 for the year, a $17,000 increase in accounts payable, and a $4,000 decrease in prepaid expenses. So now we want to prepare the operating activity section of the statement of cash flows. Okay. So now remember, the indirect method, you always want to start with your net income. So in this example, it says here net income was $225,000. Okay. Now remember, depreciation expense, it's a non-cash expense, so you want to add it back in there. Remember, it could be depreciation expense, amortization expense, or depletion expense. So that'll be for $45,000. Okay. Now loss on disposal of equipment. Remember, if it's a loss, you want to add it back in there. So you would add the $5,000. Okay. Next one, decrease in accounts receivable. Any decrease in current assets, again, you add it. So that'll be $15,000. The same thing with prepaid expenses, because the decrease in current asset, you want to add that in there. It says $4,000. Right. The last one, your increase in accounts payable. Remember, you have an increase in the current liability, you add, so it'll be $17,000. Now, you want to add all these up. And since they're all additions, you add them all up, that'll be $86,000. Okay. Now, the last part, net cash provided by operating activities. You take the $225,000 plus the $86,000, that'll be $311,000. Okay. So my net cash provided by operating activities would be $311,000. Now, because it brought cash in, it would be provided by operating activities. If you use cash, it would be used by. Okay. And the last one, presented below are financial statements for Nosker Company. It says you have your balance sheet here, comparative, and your income statement. Okay, additional data. We have some dividends declared and paid during the year. Equipment was sold for $8,500 cash. Equipment cost $50,000. Had a book value of $8,500 times sale. Depreciation expense. All sales are purchased on account. Accounts payable to amortize suppliers. All your operating expenses except for depreciation are paid in cash. Okay. Except for this one, all I want to do is prepare the investing and financing section for this part. Okay. So through all this is, the only thing that would pertain, first of all, cash flow from investing activities. The only thing that's going to be there is, back up here, is right here. Okay, it says, during the year, equipment was sold for $8,500 cash. Equipment cost $18,000 and had a book value of $8,500 times sale. Except for this one, all we want to know is how much cash you received for the investing part section. So all I'm going to put down here is, it's cash flow from investing activities. All you had was sale of equipment, $8,500. And then my net cash provided by finance, that was the only one I had. Again, because it brought cash in, it would be an increase of $8,500. Okay. All right. Actually, I'm going to make a little adjustment here. So it'll be net cash here. Remember, net cash provided by investing activities. Okay. And our last section would be our cash flows from financing activities. So put here on your chart, be cash flows from financing activities. Okay, so what would be some financial activities? We look at the issuance of common stock. What's common stock issued? let's go back to the balance sheet. So I see common stock in 2013 was $14,000. Now it's $18,000. So it's actually an increase by $4,000. So I did have an increase of common stock. So I want to add $4,000 here. Okay, next one. Let's take a look at bonds were redeemed. Okay, we're going to look at bonds payable. Again, 2013, bonds payable was $33,000. Now it's $27,000. So it went down $6,000. So $6,000 of bonds were redeemed. That means your bonds are going down by $6,000. So you want to decrease bonds by $6,000. Subtract that. Okay. And the last one was, do we have any paid dividends? And it says here, dividends declared and paid were $20,000. So you subtract $20,000 from here. Okay, and now to get my net cash used by financing activities, you want to add subtract it. So take the 4,000 minus 6,000 minus 20,000. You actually lost $22,000 here. And because cash went down, remember it's net cash now used by financing activities. Okay. All right, class. Hope everyone's doing well. If you have any questions, comments, please feel free to contact me. All right, everybody, take care.